Hi everyone, welcome back to ASX Market Watch and charting trend signals around the world. Thank you very much for joining me. It's absolutely fantastic to have you here checking out the markets with me just for a few minutes on your weekend. We're going to look at the All Ordinaries and then the world indices as well, and also the sectors in Australia that are outperforming the market. Just in case you were investing at the moment, it's wise to put your money in the stronger sectors. At least that has definitely helped me outperform the market personally. So let's just jump straight into it. This is the All Ordinaries, and it is just great to see where the market is heading overall. This is our longer term trend line at the moment, and I think last time we spoke I said that it was just falling through that and I expected it to oscillate around that trend line. Well, that's basically exactly what's happened, so that's fantastic. What we're looking at now is there's quite a lot of overhead resistance, and last time we spoke again I mentioned the 5,000 level. That's going to be a big one. We've also got the trend line resistance here, and we've got the moving average resistance here as well. So that's your 50-day, your 100-day, and 170-day moving average. Those ones, it's all below those. And as well, like a few people have been quite excited about this move up here at the moment. Just to put this into perspective, we haven't even had a higher trough or higher peak. So that's really what you're sort of expecting. At a very minimum, that's what you'd be expecting to be starting to look like a solid move upwards. Not to mention that it would really have to be above its halfway mark, for the tide to turn as well. So really, currently still in a downtrend. If we're looking at I think the Aussie dollar versus the US dollar is still falling quite dramatically as well. Last check, it was something like 91.5 US cents. So so that's not pretty as well. If that means that there's not people putting money into Australia, then they're obviously not going to be putting money into the stock market either. So just something else to consider. But yes, currently there are still strong sectors in Australia. Just really quickly, the strongest we've got is healthcare. So healthcare, as you can see, looks beautiful. Still doing really well. There's the rest of it. So happy days. Really, really cool. Information technology is still just above all of the strength indicators for myself as well. Financials. This one here is financials, yes. So financials has just peaked back above all of the strength indicators for myself as well. It's sort of oscillating up and down, but at the moment it's strong. So telecommunications is another one which has just come back into the stronger sort of side of things. And lastly, consumer discretionary. So consumer discretionary might be stocks, for example, like JB Hi-Fi. As you can see, JB Hi-Fi doing very well, still in a decent uptrend, well above its moving averages, well above any of its trend lines there as well. Still got a bit of support, just staying there for JB Hi-Fi as well. That's your example of consumer discretionary sort of stocks. So that's a basic look of the strongest sectors in Australia at the moment. Really quickly, let's look overseas. The S&P 500, as I said last time we spoke as well, it was still very strong. It's slightly weaker now, but let me just give you an idea. It's still above its 100-day moving average, so that's a good sign for me personally. Also, if we're looking at, just to give a rough idea of an Elliott Wave point of view, if we're looking at a wave 1, 2, wave 3, and the beautiful thing about this is this previous move up here is pretty much exactly 161.8% of the previous move, which is spot on for a wave 3. As you know, Elliott Wave works in 5 waves, so just really quickly, if we're looking at potentially this wave 4 is most often a sideways movement. If that is a wave 3 and 4, then we're still looking at a wave 5 to go. So a last move up, and potentially a last move up before this tapering starts and all that thing that's sort of hanging over the markets at the moment. You might be looking at well and truly potentially into the 1,750 sort of area for the S&P 500 if that does turn into a wave 5 move, which it's sort of following the rules at the moment, which is a really happy day, is a really good sign from that perspective. Other than that, obviously follow your own rules, and you could even use that as a potential sort of continuation pattern, and I'm sure a lot of people are. So, if it does break above that level, that would be potentially a good sign for the S&P 500 as well. Really quickly, the FTSE. It's currently on its longer term trend line, so currently finding support at that trend line. What I don't like about the FTSE, it's come more than 10% off its highs, so really, it's not looking pretty. It has closed below that sort of flatter trend line that I was looking at as well, and at the moment on the FTSE it does have all of that resistance hanging overhead, lots of moving averages which will provide resistance as well, and really I'd want it to close above the halfway mark before it was sort of looking strong to me again as well. So yeah, just to be very cautious, even though it has found support there, I would still be fairly cautious on the FTSE or in the FTSE sort of range of stocks. Really quickly, last but not least, let's look at China. And China, last time we spoke again, I also said that China was definitely not in an uptrend, and that was around here. And since that day, the market's actually fallen away really very dramatically. So sometimes just simply following the trend can have its benefits. Obviously, that was not enough of an uptrend for me, and I said exactly that. And the market has since then absolutely tanked. What does that look like to you, actually, as well? It looks very, very similar to August 2007, and I'll show you that in a second. But just before I do, this single bar here, this is the one thing that could give us a little bit of a bounce on the Shanghai Composite in China. Started very high, went down throughout the day over 100 points, which is just huge. So it's gone down a very large amount throughout the day and come back to trade well on its highs. So sometimes based on that, if the market closes above that level, which it has, then we potentially see a bit of a bounce there. Again, being very cautious, simply because we've got all of this overhanging resistance, and even still, we've still got trendline resistance there as well. So really, yeah, still very cautious on the Shanghai Composite. 2050 would be the second level to beat after this initial level right here. So yeah, that's basically the Shanghai Composite. Really quickly, looking at the All Ordinaries in August 2007, and what was that? That was actually the beginning of the credit crunch. So and we're sort of seeing a similar credit crunch scenario unfold in China at the moment. Where is it? Back in 2007. Here we go. In fact, it wasn't even nearly as bad in Australia, so the market that we got, this is the sort of down move, and as you can see right at the bottom here, there was that long move, started up on its highs, went down throughout the day, closed well on its highs still as well, and the market did continue up. However, 4 months later, what did we get? We got the credit crisis. Exactly. So sometimes it takes people a while to realize exactly what's happening, but the market will show you the way first. So that's really, really cool. And potentially that is what is happening in China at the moment, looking at that sort of big drop, and then we might see a bit of a bounce, and then potentially we might see the world actually wake up to realize what is actually happening in China, if it is a bad thing after all. Of course, things can change on a dime in the markets, so always follow your rules. It's very important. Use the right amount of risk, use your stop losses, very, very important. Save yourself first. That's the most important thing. Guys, I hope that has helped in some small way. Apart from that, have a great week. Happy trending until we see you again, and bye for now.